Did you know 90% of people lose money when inflation rises? That's not just a guess. History proves it. During the 1970s in the U.S., inflation was so high that even people with stable jobs saw their savings melt away. Here's the scary part. This invisible thief is still at work today. You don't see it, but it's quietly stealing from your wallet every single day. And if you don't know how to fight back, you'll be part of the same 90% who end up poorer without even realizing it. Inflation means prices for goods and services rise over time, and your money buys less and less. For example, a Big Mac at McDonald's costs just $2.39 in the year 2000. Today, the same burger is about $5.69 in many U.S. cities. Same burger, double the price. That's inflation. And here's the kicker. Even a low inflation rate compounds over time. At 3% inflation per year, $100 today will be worth only about $74 in a decade. That's like losing a quarter of your money without ever spending it. The biggest mistake: most people hold too much cash or keep it in a basic savings account. Let's say your bank pays you 3% interest, but inflation is running at 6%. You're effectively losing 3% of your money's value every year. In 10 years, that's a huge chunk gone. Meanwhile, costs for everyday essentials, groceries, gas, rent keep climbing. In 2022, U.S. gas prices hit an average of $5 per gallon, up from around $2.50 just 2 years earlier. If your paycheck didn't double in that time, you felt the squeeze. The wealthy play a different game. They know that idle cash is a liability during inflation. Stocks. Warren Buffett, one of the world's richest men, famously invests in companies with pricing power, the ability to raise prices without losing customers. Think Coca-Cola, Apple, and Procter & Gamble. Real estate. In the last decade, U.S. home prices have risen over 60% on average. Property owners not only enjoy this appreciation, but also collect rental income that can be adjusted upward over time. Gold and precious metals. In the 2008 financial crisis, gold prices surged by nearly 25% in just 1 year as investors fled to safety. Businesses and other investments. From owning a small business to investing in REITs, ETFs, or even productive farmland, these assets can grow faster than inflation. Let's pause here and bring this into today's reality. As of June 2025, the U.S. year-over-year inflation rate stands at 2.7%, up from 2.4% in May. Above the Fed's 2% target, core inflation is around 2.9%, showing that underlying price pressures remain sticky. On a monthly basis, consumer prices rose 0.3% in June, with shelter and food still driving most of the increase. These numbers matter because they influence the Federal Reserve's next moves. After inflation soared above 9% in 2022, the Fed has been gradually easing. But recent data suggests they may pause or delay rate cuts, especially with tariffs slowly pushing prices higher. Economists are even talking about a stagflation-like risk, where inflation stays high while growth slows. So, what should you do when U.S. inflation starts ticking back up? If you're in the United States, protect your purchasing power. Move excess cash into assets that outpace inflation, like S&P 500 ETFs, real estate, or tips. Lock in any long-term fixed-rate loans before interest rates climb again. Focus on income streams that can adjust with inflation, rental income, service-based businesses, or flexible side hustles. If you live outside the U.S., rise in U.S. CPI often means a stronger dollar, which can weaken your local currency. Combine that with rising inflation in your own country, and your money loses value faster. Hold part of your savings in strong foreign currencies like USD, CHF, or SGD. Buy commodities or hard assets that hold global value, gold, silver, or oil-related investments. Invest in opportunities that benefit from a stronger dollar, like export businesses or multinational stocks. And here's the mindset shift. Inflation is not just a threat, it's an opportunity. Historically, some of the biggest fortunes were made during high inflation periods. Asset prices move faster, markets get volatile, and if you're prepared, you can buy undervalued opportunities before the next boom. You don't need millions to take action. Buy a few shares of an S&P 500 ETF, historically returning about 10% annually over the long term. Put a portion of your savings into gold or silver as a hedge. Explore REITs. If you can't buy property outright, some start as low as $100. And remember, your skills are the ultimate inflation-proof asset. In the 1980s, inflation in the U.S. hit 14%, but people who upgraded their skills came out ahead. Inflation is the silent enemy of your wallet, but it doesn't have to win. With the right moves, you can protect your wealth and even grow it in tough times. Remember what Warren Buffett says, the best investment you can make is in yourself. In the next video, I'll show you 3 specific investment strategies the wealthy use to win against inflation and how you can start applying them today. Hit subscribe so you don't miss it.